Now that we've talked about the overview, looked at refined products within the US, now we can shift to the export market, because typically we normally see some of the additional products really start to get into, really head to Europe, Latin America, but there's going to be some headwinds as we go forward. And here you can see that there was a little bit of a normalization. Guys were trying to get things out ahead of the storm. Then you had some slowdowns. You're going to see some of that reflected as well this week. And then the question is going to be, what does this look like going forward? Now, gasoline remains something that's going to be relatively stable in terms of where the exports are. We're down about 51,000 barrels a day. We're going to see a little bit of an increase in gasoline exports, specifically into Latin America. The problem is Brazil has seen a big increase in refinery utilization, as well as oil production increases, not only month over month, but year over year. So that's gonna weigh, because a lot of that additional capacity is going to go into the floating market and will take additional market share within Latin America. And then at the same time, the question is going to be, if Europe continues to see a fall down in terms of demand, where does the additional gasoline go? If it can't go into PADD 1, does it go into Latin America? Now, shifting to distillate, we saw an increase of 172,000 barrels a day of exports. This is something that's going to start to fall down a bit, because Europe is going to, again, be that challenge where India, China, and these are things that we're going to go on about in our OPEC show, really kind of looking at demand issues that are continuing to arise within India and China. And you're seeing additional Asian cargoes start to get signed up, and will continue to push into Europe, as well as Middle Eastern cargoes starting to push further into Europe, which again is going to weigh on that distillate flow. Some of it will go into Latin America. You'll start to see a little bit of a shift, but again, looking again at Brazil, you're going to have some of that competition. Some of the others will see a little bit of a support, especially propane and LPG, just given where global demand is. The bigger thing is going to be our oil exports. So we were expecting a little bit of a bigger drop, and it could just be timing delays. We should see some of those additional export declines that we expected last week materialize this week. And again, it's just that timing delay. But as we go forward, and we see Europe talking about ramping down sooner in terms of refinery utilizations, staying down longer, that will directly impact U.S. exports. Now, we will see some additional exports going into China, just given the news of what they're purchasing. But we're gonna lose some of that European flow, which is just going to weigh on total crude exports over the next few weeks. And again, as we looked at with gasoline exports, we continue to see this drift closer to the 5-year average. There's really nothing out there in terms of this big surge in demand to see this really start to turn or materialize differently, especially because we have seen some drawdowns within the U.S., which is going to support keeping some of this gasoline within the market. You should see additional push from PADD 3 in the Gulf of Mexico or the Gulf Coast further north into both PADD 2, PADD 4, and as well as PADD 1, which is going to continue to see some of these exports pulled out of the international market and further into the U.S. as you see some of that backfill specifically into the East Coast. The one that we keep talking about with distillate, just based on some of the benefits, because, even though we talked about a little bit of a slowdown in shipping, it still has gotten better. So that still is going to go into the market. The bigger issue is when we look into India and we see about 50% of their trucking capacities on the sidelines. You've seen a decline of about 22% of diesel demand within India. The fill rates within China continue to be at 80 to 85% on the refined product level. So again, these things are going to have to reach into the export market. China, we've already seen them talk about, and just based on our early indications, August. And so August is going to be back to the March levels for refined product exports. So again, that's going to kind of weigh as everything kind of gets bumped over as China goes into Singapore and India start to go. If they can't get into South Korea, they'll start going to Europe, and that's going to hit us directly. And again, when we look at things, we have to look at it on an aggregate basis. So Fujairah had a drop in refined in distillate, but again, it didn't offset the large increase that we saw that was really counter seasonal last week. So we actually still are not where we should be in Fujairah, which again speaks to some of the shipping slowdowns that we're starting to see materialize. Japan also had a build across the board, and this move down was really driven by the U.S. So you can see, even though the U.S. had let's just say relatively good numbers, but we have to put that into context based on the hurricane, based on some of the issues that we've seen, and you'll start to see some of these things normalize. On an aggregate level, we still remain oversupplied on a global level, which is going to be a problem as we continue to look at margins being under pressure, refinery run cuts, which is then going to weigh of, well, how is Saudi Arabia going to react with official selling prices? Are we going to see additional cuts in terms of pricing just because we've seen the physical market weaken so much? A lot of these prices have really come under pressure. So how will Saudi respond in terms of cutting some of this pricing, which would then help some of the refiners, because now you're giving some of the margin back to the refiner and hopefully trying to get them to increase or at least stay at a relative level, because they can pass on some of those cost savings while still making a margin. So these are things that we're going to talk about more on the OPEC show as we start to see some of these adjustments happen in the market. But again, on an overall aggregate level, we still have a lot of work to do to kind of get to these normal levels. So thanks again for watching. We're going to have our economy show coming out. We're going to start to look at the dollar in terms of inflation, and as well as, okay, well, inflation, but also what is the reserve currency status. Then we're going to have a little bit of a shorter show on Friday, just so everybody can get to their Labor Day weekend, and where we're just going to cover the primary vision frac spread count. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.